Hey guys, today's September the 24th of 2022, and I wanted to do a quick update on the US dollar. We hit a target that I have of 113, and I'm going to show you some things that if it doesn't stall here, it could potentially go higher. I'm actually recording this video in South Africa, Johannesburg. Beautiful town, beautiful people, beautiful place. I would love to live here if I had the opportunity. But without any further delay, let's get into the charts. So we're going to start out with our weekly chart using data from 2000 of June, going to current prices. And there are three cycles. One has good correlation, the other two don't. So we're going to start off with the bigger one, the 396. This is long term. This one is if the dollar is going to continue making higher highs and higher lows using the 396 cycle. It hits a peak somewhere around January, December of 2023, 2024. The next one is the 229, and this one hits a peak somewhere around September of 2023, the last week, first week of October of 2023. September, October 2023. And then the last one here, which is the strongest and also the one that has the best correlation, 0.55. You can see that we are going to hit a peak somewhere around the last week of October, first week of November of 2022 using the 180. So that one, this is the one that is the most closest to a price action. If you take the 180 and do a composite with the 396, it hits a peak of January of 2023. That's a composite. So 180 is the one I'm leaning on, and just keep your eyes open for the dollar on the weekly chart for October, last week of October, first week of November. For a possible swing high, I say. Okay, so here's a daily chart, and I'm using data from 2016 of October to current prices. And there are two that are important here. One is the 312. This one doesn't have good correlation, but this one hits a peak pretty much this week. This week just hit a peak on the dollar. Take that one off and add the 178. And the 178 hit a peak way back in July. And you can see that it's still pushed higher. And it's going to hit a trough around November 4th. So you can see that both of these, you do a composite, is showing a down cycle. But if you put the 312 by itself, mind you, the correlation is not good at all. You see that we hit a peak. We just hit a peak this week on the dollar using the daily cycle. Okay, so this is a seasonality chart. Year to date, you can see that we're hovering around 15.36%. We'll start out with the 15-year average. You can see that from here, September 16, it goes up. So with third. Then it goes down to like October 18, pushes higher to November 16, and kind of goes sideways. We had the 10-year average. You can see that on September 16, we get a leg higher, kind of stall around the first week of October, and then gets another leg higher from the October 18th and hits a peak somewhere around November 23rd. And then it kind of just goes sideways. If we had our 5-year average, same thing, September 16, we hit a peak somewhere around the first week of October. October 5th pulls back, kind of the same as the 10-year. October 19 gets a leg higher, and then we hit a peak somewhere around November 11th, and this one looks like it kind of stalls here and goes down. So let's add them all and see kind of what we see here. So pretty much they're all in agreement from September 16 on You could say maybe October 5th, it kind of stalls pretty much, all three averages. And somewhere between October 14 and October 19, we get another leg higher. And you see that from November 10th, the 5 and the 10-year average kind of peak out here. The 5-year peaks out at the November 10th, but the 10-year peaks out somewhere around November 23rd. You guys know that on the weekly cycle, we're hitting a peak between the last week of October and I believe the first week of November. So you got seasonalities here peaking in November. So keep an eye on that. You got a couple of dates to watch: November 10th and the November 20, around the 22nd, 23rd, in regards to seasonality. Okay, so here we have another chart that I like to also see. Percent of months in which US dollar closed higher than it opened from 2018 to 2022. I like to look at the 5-year. And you can see that the August, September, October is kind of flat. November, so August, September, and November are pretty strong. There's no really data for December. We go straight to the 10-year, and you can see that now pretty much October and November are really strong, and December is the weakest. So it kind of makes sense with the weekly cycles peaking between the last week of October, first week of November. Seasonality showing that November, the 10th and the 23rd, making peaks up in those, those time frames and dates. So this kind of makes sense. Everything, as of now is becoming like a nice little cluster of data that, it's making sense. Let's go straight to the 20-year and see what we have there. You can see that November is still strong. And December's a little weak. There was a pullback in the seasonality in regards to October, but then, it pushes even higher. And you can see that December is still weak. So that's what, another confirmation in regards to seasonality that you want to keep an eye on and kind of just build up data and a profile on the dollar and see, how far and how high can it potentially go in regards to time. And we're going to be working later in some other clips in regards to price. All right, so we're going on price right now. So let's see what we have here. I have been looking at different dollar index and, futures. And I came across one that has a high of somewhere around maybe February, January, February, somewhere around there. You can say February of 1985, and it went as high as $164.72. So when I think my last video, I wasn't using this chart, and I had a target of 113. I don't think I have to look back, but the 786 Fibonacci level was somewhere around 113, but it was picking another high. And one of the things that Gann always says, try to get the most data that you could ever get on the instrument that you're trading. So this is as far as I could go. And, hopefully the data is correct. I've downloaded some things and it's not the best data, but I'm going to try to use it the best I can. So I wanted to kind of, go even further back and just kind of see levels that you want to keep an eye on. So as we get closer, we hit a target of 117. And now there's some new targets that I wanted to show you. This is the 61.8 level. So using this data, the 119 is going to be your 61.8. There is, I'm going to be showing you another chart, the 117 area. That's the 50%, which we call the center of gravity. But I guess maybe, let's see. So that was one. Yeah, so maybe my other chart that I'll be showing you in the master chart doesn't go as high as 164. But you get the picture. Some data is good, some data is bad. we just kind of have to work with, ballparks and averages, close to. So just keep an eye on the 119, and this high over here was 121, 120. So those are levels. What has happened now is that the dollar has penetrated the supply zone. So this is where supply will give it some restriction. This is going to be a nice little selling area where the bears will want to, participate here. And this is where the battle will begin. I just wanted to show you these levels just to keep an eye on that. Okay, so this is the last clip of the presentation that I wanted to show you on the dollar. We'll start out with some Gann's technique using the Gann fan. You can see taking this high. You see this high is around 163, around there. This data is not the best data. There's a lot of weird stuff in it. So we just have to, it's close, but it probably won't be perfect. But just using what we have here, you can see that this is the 1x1, the 1x2, and the 1x4. We just hit the 1x4 right now. And this is going to be a little area of resistance. This little area could probably peak its head up, kind of chop around, then pull back in. We got to keep an eye on that, on this angle. And this is a 45 degrees. So this is not just randomly, putting this angle anywhere. This is from this high 45 degrees down. This is the 1x4. So we take that off and add, a 45 degree from the low here of 2008, which was like $70 and change. This is the 1x1. You can see that this is the 1x2. And we just kind of pierced above it. Just sticking our head out right above the 1x2. So it'll be interesting to see how this is all going to play it out over here. Let's close that over there. Let's see what else we got. Next thing is the Fibonacci. Now, since we have, it's 164. So I can't remember what the trading view was, 161 around there. So this one is an index I got. And taking it from the low, you can see that the 50%, which is the center of gravity, is 117. I think in the trading view was 119. So anywhere between 117, actually the 119 was the 61.8 Fibonacci level. Since this one goes a little higher, the 61.8 goes all the way to 128. So that's another area you want to keep an eye on. But if you look at the 50%, which is a 117, you can see that it kind of stalled around there in that area, using this data set. So these are the levels you want to watch: 117 and 128. If it's really going to push, into November, I don't know if it's going to go that high into November, but if the weekly cycle is going into next year, 2023, that could probably be a possible target, even up there. But that all remains to be seen. So just keep an eye on that. Using the Gann square, and I picked it from from here to here. Normally, then I would do another level of 2 from here to here, but we're so close to this price level that it's not worth even doing it. It's just better using the bigger range from here to here. And this is the 1/4 level, which is the same thing as the Fibonacci, is the center of gravity. But in regards to Gann square, this is the 1/4, and these are the 1/8. The 1/8 is the 129, and this one over here, 105. And we just hit a timing point, like a vector, on August the 14th, and this is where we're at right now. So it still has room to go and kiss the 117 without any issues as of now. But know that this is a supply zone. Now that we have that out of the way, let's zoom in a little closer and see what we have here in regards. Mind you, these are just closes that I have. Another thing I want to show you is a channel. Using this channel from right here to here and pivoting down here, you can see that it's almost it's almost like a trend line right now, but then there's like a measured move that shoots all the way to 136. I don't know if we're going to get there, but my purpose in showing this is just to show you that that trend line from right here, we're going to be kissing it very soon, or we already have kissed it. So keep an eye on that. Another one here is the pitchfork. And this one we have to close it a little bit. This is a pitchfork from the bottom low here, 2008, and expanding it. We're about to hit this channel right here, or this angle from the Andrews pitchfork of 117. So 117 is the 50%. So if you kind of see what I'm hinting at, is that there's a lot of clusters around 117 and 119 and 121 around there. Very heavy in supply, hitting geometric angles, point of resistance. So you want to keep an eye on this, and then, timing it with the cycles, daily, the weekly, seasonality, October, November. You want to keep an eye on that once we get closer to that, and just look at volume and price, and look at candle patterns, and look at the dates and the times of all these things all playing out. And if it makes sense to you, that's when you could probably, play a reverse trade on other, in regards to currency, gold, and maybe even the markets, the ones that pretty much get affected by the US dollar. Because, they're not going to tell you when it's going to turn. You have to do all the hard work and all the legwork and try to, use probability of where it could possibly turn. But so far it's strong and it looks good. And we're going to be heading into some resistance. Let's see what else I wanted to show you. In regards to the solar cycles, we're going to have to zoom in here a little more. Solar cycle, way zoom in. You can see that we have November the 21st. Kind of confirms the seasonality I showed you. It says that it pulls back here to October 14, then it goes up the 21st, and it pulls back. Kind of shows that December is a little weak. Then it goes up into February. So keep an eye on that. Using some of the spectrum cycles here, you can see that this green is hitting a peak. Kind of lines up with the daily and the other ones I showed you, while this blue one is hitting a bigger cycle here. So what I did a composite of these three cycles, and this is what kind of you get. But this one goes all the way to April of 2023. So I'm just leaving it at there just to see how that's going to play out. So I'll take this off, put the solar cycle there, and then put some seasonality and see what we have here. But this one we got to zoom in a little more, especially between now and the end of the year. So our solar cycle says somewhere around November the 21st. This is the annual and decimal. Peak somewhere around the last week of October. You guys know the last week of October seasonality. It gets a little weak there. So there's a lot of stuff peaking in November, and then it goes down towards the end of the year. So keep that in mind. Let's open this up here. Using our 10-year Gans technique averages, you can see that it hits a peak somewhere around November 18th. It kind of lines up all right here. And he also used the 20-year, and the 20-year shows a peak somewhere around October 19th. And then it pulls back in, it's the 26th, and then it goes down. So this is where you want to keep your eye on October and November. This is the hot spot, or what I call the kill zone. You can't get too early. You can, wait for it to really start tanking to get in, unless it all depends on risk. So keep an eye on this area, because this is going to be the hot spot. If you trade the dollar, or you do currencies, you want to keep an eye on the euro between here and there, gold, maybe the U.S. markets, and anything else that affects the dollar. I'll tell you a little story. I'm here in Johannesburg, and man, when I got some food at the hotel, it reflects how strong the dollar is, because I'm king here with the dollar being this strong. Everything else is like super cheap. I have a lot of buying power here in Africa, South Africa. But I don't think it's going to be like that forever. So I'm taking advantage of that situation. And once the cycles turn, then, the dollar is going to turn also, and everybody else is going to, return back to the means. Oh, I'm going to sign out. I don't want to make this video too long, but if you like this video, hit a like button, and I'll keep you posted on my thoughts on the US dollar using double again price and time technical analysis.